Hello, my name is Chad Hart. I'm an extension economist at Iowa State University. And here in the month of November, USDA gives us not only an update on what we're seeing with this year's crop, but they actually give us a preview on what we're seeing, set up for next year's crop as well. And so I'd like to review that with you here today. And so, as we're looking at the crop markets, the idea is harvest has mostly rolled in. We are well above 80% in terms of both corn and soybean harvest going on throughout the nation. So, the vast majority of the crop is in, which means USDA should be getting really good estimates as they're looking at on the supply side of the corn and soybean markets. And what they found, at least here in November, is that they found more reason to believe that the crops did better than anybody had expected, especially in dealing with the drought. As I mentioned before, the idea is the USDA not only updated those 2023 numbers, but they've given us a snapshot looking into 2024. The changes that they made this month were they ended up adding nearly 2 bushels back to the yield when we're looking at the national yield for 2023, raising that back up to nearly 175 bushels per acre. So we're looking at a 15.2 billion bushel corn crop, which would be the largest we've ever had. So that's showing plenty of supplies as we look out there, because that 2 bushel per acre increase translated into about 170 million bushels more on the production side. Now, looking down in the gray box into the usage, what we found for 2023 is that USDA saw that while we're getting a bigger crop, they do expect us to use more of that crop as well. They ended up raising feed demand up 50 million bushels. They also raised exports up 50, and then they ended up raising ethanol 25. So that brings the grand total on the usage side of up 125 million bushels. So that meant when we came down to ending stocks, they're going up, but not as quickly as they could have been. We ended up adding 45 million bushels there. Those larger stocks did give USDA the latitude to bring prices down, which they did. They lowered their season average price down by 10 cents. So we're now standing at $4.85 a bushel. As we look into 2024, USDA expects farmers to plant less corn next year. I think based upon these lower prices, they're looking at 91 million acres. Their trend line yield right now would be at 181 bushels per acre, so about 6 bushels more than what we experienced this year. You work through the math on that, and that points to another 15 billion bushel corn crop coming in next year. Now, as they're looking forward, USDA sees continued recovery on the feed side as we likely begin to add back to the cattle herd. They see a slight pullback on the ethanol side and on the export side right now. So, all in all, it's mixed when it comes to the usage categories. So, they're expecting the stocks continue to build and prices to continue to shrink as they're looking at a season average price for 2024 right now, weighing in at the $4.50 range. Now, when it came to soybeans, it was a similar tale there in that what USDA found for 2023 was, again, a bigger crop. They ended up adding 3/10 of a bushel to the yield here in 2023. That ends up adding about 25 million bushels to the total production there. They didn't make any changes to demand, though, when it came to the usage side for soybeans. So they kept those all the same. So crush at 2.3 billion bushels and exports weighing in at 1.75 billion bushels. So that meant all we did was transfer that additional production into the ending stocks. And while that did raise them some, we're still talking about some very tight stocks as we finish out the year, weighing in at 245 million bushels. And they left price as it was. They had been estimating at 1290 and they held there. Now, looking forward into 2024, they expect some of that area that's coming out of corn to head to soybeans as these prices have held on a bit better than what we've seen in the corn market. So they're looking for 87 million acres there. Trend line yield of 52 bushels per acre. So they're looking for a bigger soybean crop next year, weighing in at nearly 4.5 billion bushels, which would be a very large soybean crop. Now, as they look at the usage side for 2024, they do expect domestic crush demand to continue to build. A lot of that's related to renewable diesel, so looking at that next generation of biofuels, and they are looking for a recovery in the export markets for 2024. So we're going to struggle here through the 2023 crop year, but then looking for a little bit of rebound as we look out towards 2024. That said, they do see ending stocks continuing to build here, and they do see lower prices for soybeans as well, looking at a season average price of $11.30 a bushel. So as we're looking at, the updates for this year, what USDA found and what farmers found is, again, the crop was a little bit better than expected. Now, here in Iowa, they adjusted our corn yield up by a bushel, so brought us up to around 200 bushels per acre. We saw larger yield growth, if you will, to our north and south. We did see like the Dakotas gain a few more bushels. Down in Missouri, added 6 bushels per acre. And so some of the places where we saw the most drought stress this year came back with some better crops than were expected. And so as we're looking at the overall picture, the eastern corn crop, near record production out there. The western corn crop, we struggled a little bit, but we still had a really good crop here. And that's leading to plenty of supplies on the corn side going into this winter. Now, as we're looking at soybeans, the idea is that yield pattern remains the same. Again, the eastern corn belt states having really good yields to record yields, more of a struggle out here out west. So again, lots of supplies to work with for here in the market, but we are seeing avenues for improvement out there. One of the things that was interesting to me is watching what we're seeing on the world scale. And so when you're looking at world corn production, for example, it is higher, estimated higher with um, these past set of estimates, but we saw most of the growth here within the US. We didn't see any continued growth coming out of South America necessarily. And that's going to be one of the things I'm going to be watching over the next couple of months because, especially Brazil, there's been indications of some struggles with the weather down there over the past couple of months. When does that really start to show up in these numbers? It hasn't yet. And that's going to matter for both corn and soybeans. As we're looking here again, the growth was here in the US. We're not seeing as much growth necessarily now or changing that growth outside the US markets. And again, they kept the Argentina and Brazil numbers the same here. Will we see those numbers start to slip if those weather conditions do not improve in South America? Now, looking at our export pace thus far, with soybeans, we sort of started in a hole at the beginning of the marketing year, and we really haven't made up any ground. That's despite some encouraging signs out there. We have seen China stepping back into the market, but they seem to be doing it at a pace similar to what we had last year. And so we're not really gaining back on normal or gaining back on our pace over the last couple of years. When it comes to corn, we are seeing some momentum there. It's been building over the past 5 or 6 weeks. That is part of what I think encouraged USDA to go ahead and bump those export estimates up for the 2023 crop. But they're still looking at corn exports at the end of the year coming in a little bit below that 5 year average line. So think of the red line here staying below the black line as we go through the year, but we'll get close by the end of the year. Now, when it comes to feed demand, USDA gave us some encouraging news, at least on the beef side. They do see continued, let's call it improvement there. While we are seeing the beef industry shrink as we look into 2024, that depth of the cut is lessening there. They actually ended up adding about a 500,000,000 pounds in production in 2024, which helped offset a lot of the pullback that they're seeing in the pork and broiler industries. They're not seeing as much growth there as they had originally anticipated. So all in all, we're still seeing some shrinkage in total meat production, but it's not as bad as it was, say, 2 or 3 months ago. And that, again, gave USDA some encouragement to go ahead and boost those feed prospects as we look out towards 2024. Now, looking at ethanol, again, sort of steady as she goes. We have been seeing some fairly good blending margins over the past few months. We also don't see a lot of ethanol in storage right now, and so that's helping keep ethanol production and that corn grind for that ethanol production moving at a fairly brisk pace. That's weighing in here, like I say, holding us around 5.3 billion bushels for the year. And that's basically what USDA is saying for both this year and next year. So when it comes right down to it, the markets have sort of settled into this idea that we've got these bigger crops. We've pushed those prices down. And in fact, I'd say USDA and the markets have sort of come to this, well, I guess I'll call it balancing act, in that, in this case, USDA is more optimistic for this year's crop than the market is, but that flips as we look towards next year's crop. And so as you look here, these are the futures market prices as of the end of November 10th. And where USDA had season average price of 485, right now the market's around 470. And as USDA was saying 450 for 2024, the market's up near 5. I think the market is sort of betting on, yeah, reduced acreage in 2024, but it's also looking at the possibility we could see some additional demand strength out there, especially from the international markets, helping buoy corn as we look deeper into 2024 and 2025. Now, when it comes to soybeans, sort of a similar tale here in that, you do see that pricing pressure building up for 2024. But the idea is that the market is more optimistic on soybeans across the board here. So USDA is at 1290 for this year's crop. The market's weighing in at 1310. As we look out to 2024, the market's holding at around 1250, where USDA's got that number down at 1130. And I think this also comes back to this question of how much of an acreage shift do we see this coming spring? As it stands right now, USDA shows the vast majority of the acreage coming out of corn going into soybeans. I think the market is saying that we could see it, some of it spill into soybeans, but we may see it split apart a little bit more, give a little bit to wheat, give a little bit of cotton, and the idea of that seeing then less pricing downward pressure on the soybean market for 2024. Well, that's the quick outlook here as we're looking at what's happening in the marketplace right now. Going forward, USDA will provide another update in December. That one will be mostly a demand update, as they almost never change the production numbers with the December report. And then as we get into January, we'll get the final estimates on the supply side for the 2023 crop. And that's when we really start to set the stage of thinking forward, looking into 2024. USDA, like I say, has provided that initial estimate right now, but we'll see that refined as we get into January and February of 2024. With that, my name is Chad Hart, Extension Economist of Iowa State University. Thank you for your time.